Good afternoon and Happy New Year. Today is the 1st of January 2011, and let's go ahead and take a look at these markets and then a whole bunch of ideas for the upcoming week. First up, I'm not going to do a whole big review of what happened during the year. Obviously, there was a lot of opportunity, volatility, which means opportunity. Now, what you will notice is the last couple years, the first couple weeks of the year have really kind of thrown the market into some bigger volatility here, and that doesn't necessarily mean what's going to happen for the rest of the year. So, for instance, we had down in January of '08, but and a down market. We had down in January of '09, but a real strong uptrend, and down last year in January, but then the market turned around and, we had a lot more volatility there. So we need to remain focused on really the same things going forward. I have no grand predictions. The only thing that I want to do is be better at what I do and try to hold winners longer and focus on opportunities as they present themselves to us and manage risk. So nothing's really changed in that regard. The S&P 500 is in an uptrend. It seems as though it's maybe a little bit tired here, a little pullback down towards 125 wouldn't be unexpected or unreasonable here. We're seeing maybe a little resistance near that 5-day moving average, so that's something to be aware of. But again, not concerned. The Nasdaq started breaking down a little bit in here. Bigger support, probably down near about $54 a share. If we break that, want to be a little bit more defensive. And the Russell got hit a little bit harder Friday afternoon as well. 78 is a bigger number in there. If we break that, then perhaps we're going to see movement down towards maybe the next level is a dollar weight, about 77. The semiconductors have traded in a very tight range here. Anyone's guess as to which way they're going to break. The primary trend is higher, so that would suggest that they do move higher. But if this market is correcting through time, then we would be looking for upward movement through about the 32.75 level that could propel the next leg higher in the semiconductors. Even though they're extended, they have been digesting these gains nicely through time. The uptrend line has been broken, more of a function of, I guess that's not true. It will be broken as a function of time here on, basically Monday if we just continue to turn sideways. And we have broken that 20-day moving average with nothing bad happening. The financials are still looking like they're headed for the flash crash highs up near about 16.15. I was surprised we didn't get that this year, but or last year, but still look decent here on the financials. Breaking below 1580 would be a little bit of reason for concern, I guess, in the financial group. But overall, the markets are in an uptrend. They're extended here a little bit. We've seen a lot of little stocks getting big movement. That's indicative of froth or excess speculation, basically. So those are things to be aware of. Some of the stocks that we want to take a look at. In the first week here would include ATPG. ATPG, we're going to make this one an official purchase idea. We've been looking at it and talking about it. A lot of people do own it, I realize. But officially, I think we want to buy it above Friday's high. So above $16.95, we could purchase the stock with a stop down at a conservative level of $16.40 for swing traders. If you're a day trader looking to hold it, maybe you get a little bit of a cheat buy in there. Maybe you buy it above 1680 or something. But again, what I'm trying to point out are swing trade opportunities. A lot of times I will day trade them. Other people will day trade them as well. But we're going to track them as swing trades. So if you're interested in swing trades, the updates, the stops will be updated, and you basically want to follow that plan. C-Trip, this is China. What was it? China Travel, I guess, has been having some trouble here. It's in a downtrend, lower highs and lower lows. It's been having difficulty here with this 200-day moving average, and looks like it's ready for another drop lower, perhaps to test down in towards about that 39 area. But when we take a look at the 10-minute time frame, it gapped lower, tried to recover on Friday, and then sold off late in the day. The pivot for Friday is going to be at 40, or for Monday rather, is going to be at $40 $40.82. And that's interesting because it's also this prior support. So what we'd like to see is a rally to at least 40.75. Doesn't need to get up to the pivot, but at least to 40.75, and then we want to sell it short on weakness. So we don't want to sell it short at 40.75, but we want to see it get up to at least 40.75 and then sell short weakness below $40.55. Once we're in it, I think we can set our stop right up here at about 41 and a dime. Not really much reason to risk more than that, especially when we're considering it for a move down towards about 30, 38 and a half to 39. I would say is reasonable. Test these lows that it saw in December. So we want to see it rally to at least 40.75. Maybe it goes to 40.80, 40.90, 41. We don't want to sell it short on the way up. We want to see it hit at least 40.75, maybe fall short of that pivot, or go up and then drop back down through that $40.55 level, and then protect ourselves with a stop at 41.10. Triple R, this is RSC Holdings. Real nice looking weekly chart. Looks like it's got some room to make maybe a couple point rally up towards that $12 area. And on this one, you can see we pulled back, tested just above that rising 20-day moving average. What we want to do is buy it above these recent highs in here. These recent highs are $9.90. So if the stock can make it back above $9.90, then we want to be a purchaser of this stock, and $9.90 would be right here. So if it can make it above this high that it had seen last week at $9.90, we want to buy that as a swing trade with a stop down here at about $9.45. Obviously, if you want to keep your stop tighter, perhaps you could put it down near that $9.70 level. We're going to try to track this thing for a longer term swing trade, so we'll keep a conservative stop at $9.45. Other stocks to keep an eye on as a watch list would include AK Steel. Real nice consolidation in here above this prior resistance level, and the weekly chart looks good. On a 10-minute time frame, it might need to clear some of this resistance up closer towards 1670, but worth keeping an eye on and starting to track that one a little bit. We've had our eye on this LNG. It probably really needs to clear these highs from last week. It's begun to pull back a little bit, lower highs and lower lows, so I might set an alert at about 575 for LNG, but it's got a great looking weekly chart, so definitely want to continue to keep an eye on that one. SOLR maybe needs to clear these highs up near about 9.5, but this is probably one of the better looking solar plays still out there, and maybe you could short term trade it above 925 or so on Monday, looking for a day trade type situation, and then kind of see how it sets up from there. STEC is setting up nicely for a break past some resistance up near about $18 a share. It's just not quite there yet. Actually, these recent highs are $17.96. If it can do that, then it's got a nice looking weekly chart, and I wouldn't be surprised to see north of $20 a share in STEC. So it trades a little more than 1 million shares a day. It's setting up nicely, but it's not quite there yet. Definitely you want to keep an eye on that one. Here's a nice looking little one, Vantage Drilling, VTG. These guys trade 2.9 million shares a day. Look at this weekly chart in here. This is, if we can still see some action in these smaller stocks, then VTG is holding on to the gains after breaking past this resistance here from the last couple of years. So $2 seems like it's trying to be held as support, and if it can break out from there, I mean, where's the potential resistance? You look at this thing, there wasn't really a lot of price history during this vicious breakdown in here, and that could set the stock up for maybe one, the first double of the year. Revenues last quarter were up 84% for this stock, and maybe they're turning the corner here. They do offshore drilling services for oil and gas, but you take a look at the shorter term time frame. Maybe it needs to clear 209. Maybe it's going to be above 207. I don't know. We've got it in a tight range with support. I'd say worst case, you focus on the risk and say if it breaks below 195, you'd want to be out of it. That is what you can focus on for now. the purchase point. Maybe you buy a little bit here, add to it on strength. Tough to say, but it sure is a nice looking stock that seems like it could get going nicely this year. Some of the gaming stocks, Boyd is still strong. I'm going to go through these quickly. IGT, still want to keep an eye on that one. It's looking good. MPEL, I'd mentioned on Friday. Good looking little Chinese casino name. Keep an eye on that one. The best one I still think though for the year ahead is probably MGM Grand. MGM, it's got room. I think up towards at least that $17 level, and could possibly push up through there into the 20s this year ahead. I think that getting above 15.05, 15 and a dime, the recent highs here at about 15 and a dime, it could probably get going. I would say keep it a closer eye on this one. Maybe set an alert at about $15 a share. But MGM's a good looking one. There continues to be a lot of opportunity in the rare earth metal plays. This AVL is one that came off the bulletin board. It was AVARF last Monday. It was a big winner, and it's consolidating these gains pretty nicely. Might need to clear 675, 680 to really get going, but it's holding up above that rising 5-day moving average. Definitely want to keep an eye on that one if you're trading these rare earth plays, and even the rare earth plays that aren't even rare earth. CHGS, this one has been associated with rare earth. However, they don't trade with, they're an oil company, not rare earth, which is crazy. And everyone knew that on Thursday afternoon. So I think a lot of shorts got involved, and then some big hedge funds said, "Hey, let's just keep buying this thing, and we'll just squeeze all the shorts because it's too obvious of a short." But if this thing could get it back above 5 and a quarter on Monday, maybe there's an opportunity to trade this thing with a, you look at it since the event, the volume weighted average price since the event, which was basically 4 days ago that it started moving. It's holding above that, so until it does that, it's still innocent till proven guilty, regardless of what the story is or how bad the story might seem. General Malloy, GMO, still has room on this weekly chart, maybe up towards $8 a share, and you can see it was up on big volume, started to pull back on lighter volume Thursday and Friday of last week. It's right above that 5-day moving average, which is rising. We have lower highs and lower lows. If that pattern breaks, then maybe up through 685 or so, GMO could get going higher. But if you're day trading and you're looking for the action, this is where the action is. MCP has gotten a little bit choppy up in here. You take a look at the last couple of days, just a lot of back and forth, gappy, and then real sudden moves. So I'm not as thrilled about this one here. It's had a really nice run. Let's see if it can hold on to these gains and kind of rebuild for another push higher before really, I think, getting involved in that. RE was a great one last week as it did break that $11.60 level. It did so late in the day on Monday, gapped higher, and then continued to run. So RE has been a steady climber. It seems as though maybe this pattern, though, of higher highs and higher lows is in jeopardy here. So keep a close eye on RE, but it's one of the more extended ones. SHZ had a massive run, and this is one's consolidating nicer than RE or MCP. You can see much longer term. It did get up to just about to its all-time highs there. And looking at a 10-minute time frame, it's holding up nicely in here. And I was looking at this one Friday, thinking that maybe above this 845 level could get going. It never got up through that level, but maybe up through 845 you could get a day trade, and then it would have to clear this 875 level. But it does hold up nicely. It trades a ton of volume. And finally, Zing, which we know is another one of these companies that just recently reported, hey, we're a rare earth company. And who knows whether they actually trade in rare earth minerals or not, but or elements or minerals, whatever they are. But it got going on massive volume, and this is the type of stock that could continue up towards $4 a share. As crazy as the story is, it's about momentum, it's about hype, and where the what next person's willing to pay, and these things can go a lot further than we expect. So maybe above 290, it clears Friday's high. That is that it could get moving higher again. It's a dangerous stock. These things could completely fail. So just be aware of that. There are these little, highly speculative Chinese names, but those rare earth plays are in demand and in play, as are the uranium plays. They've been strong last year, and they continue to hold up very nicely. Denison Mines looks like it's trying to break some resistance here on this 30-minute time frame. You can see at this 335-ish level. If you break these highs up near 360, it could get going. If you're day trading, you want to cheat buy maybe above 350-ish or so, then 346 maybe, then that could get going. But it's still got room to run here on this weekly time frame. So it doesn't mean we're going to get up towards that level, but you could look at this thing and say, where's the potential for supply? Maybe up near $5 a share. UEC is another one. This is Uranium Energy, UEC. It's up at all-time highs. We look at that daily chart, and it's consolidating here, kind of similar to LNG, the consolidation, but still, maybe we get this thing going up above $6.25 is where this one could, that's been the resistance basically the last day and a half, and if it can break that level, then perhaps it could push up to the highs north of $7 a share. So UEC, URRE is also obviously been a big one, but Uranium Corp, Resource Corp, URRE, it could maybe be continuing up towards these levels. The thing I would say though is when these groups get going, similar to what we saw earlier in the year with these solar plays like JASO was a great longer term break, and then we were looking when we caught that break, we're also looking at it for maybe another push higher in here. These things can and do fail, so don't get caught up in, hey, it's uranium and these people are buying uranium or whatever. That don't get caught up in the story. Just focus on the price action. The story is uranium's in play. Why? Who knows? Are they building more nuclear bombs, nuclear plants, whatever? If we get up through $3.50 in Uranium Corp, URR Resources Inc., then it could get going. And managing risk, obviously, is always the first and foremost thing to stay focused on. $4 a share has kind of been important for URZ, and we're up towards that level, but if we can push through it, maybe it's got another buck on uranium. Uraners or whatever they call it, but this one's been a stronger one in this group, and you could say it's a handle in a cup here. But if it breaks these recent highs, maybe it could get going. It's holding up very nicely, maybe above $4 a share. It's worth a day trade with a stop underneath 10, maybe 10 cents, maybe 20 cents away, depending on how you particularly look at day trading. USU is the uranium play that just always looks good and never does anything, kind of like CELL on the weekly time frame. But eventually, if USU can get going up through this 6.5 type area, maybe we're going to see it at an $8 stock. It's definitely the weaker one of the group, so nothing to get excited about, but it's setting up kind of in here, and that's worth keeping an eye on. I'm going to take a look at some January effect plays before the weekend is out as well, but I didn't want to add that to this video because it's probably already got way too many ideas, but I wanted to kind of go individual names and some sectors there. I hope 2011 is going to be a great year for all of us.